Let's briefly chat about interest rates. Now, I love talking about interest rates, so I'll try to keep this really short and sweet. When you can't afford to buy a property entirely in cash, you would need to get money from a lender to afford it. Lenders come in many forms, sometimes they're even family members, but for this case, we'll talk about more traditional lenders like the bank. The lender is the one who covers your mortgage loan above your down payment. Since they're the ones lending you the cash to top you up to the purchase price, you pay the lender interest on the amount of money that they agree to lend to you. Like we just discussed with mortgage pre-approvals in my last video, your pre-approval locks in an interest rate during the time period that it's valid for. This means that if you're pre-approved at a certain rate and interest rates go up a few weeks later, as long as you purchase a property before your pre-approval expires, you can still be granted a mortgage loan at that lower rate. On the flip side of that, if interest rates were to go up and your pre-approval expires, you can renew it, but the lender may not grant you the same interest rate as they did before. Just something to keep in mind. This is where you can choose to be a savvy home buyer, but you'd be surprised at how many people freeze and miss this opportunity, so listen up. Many buyers wait to see if interest rates will decrease before getting a pre-approval. But here's the thing, speculation of interest rates decreasing never equates to certainty that they actually will. So if you're looking to buy a property in the next few months, do yourself a huge favor and get a mortgage pre-approval before you start your home search, regardless of when the next interest rate announcement is. If the interest rates decrease in the meantime, the lender will honor the rate. If you wait for the interest rate announcement and rates go up instead, you'll likely have to deal with higher interest payments, which can be a big difference in how much money you're paying toward interest when you're talking about a several $100,000 loan. Now, one quick twist to throw in here is that when interest rates decrease, prices tend to go up and vice versa. The caveat to this is that the price at which you agree to purchase a property is set in stone, whereas interest rates fluctuate, which can drastically affect how much you end up paying in interest. So back to being a savvy home buyer, if you had a mortgage pre-approval in hand while you were shopping for properties and interest rates happened to be on the precipice of a decrease right as you bought your home, you could benefit from a lower interest rate and a lower purchase price, which is a win-win. The moral of the story here is to ask questions to people who know about the things that you don't, to gain clarity and understanding. This, coupled with knowing your budget, income, and expenses, will allow you to buy a home with confidence and ease. Now, I know numbers can seem daunting to some people, so next let's chat about some of the cost considerations related to homeownership to make sure that your budget is ironclad. You can do this. We're almost there. Let's go.